Okay. Just as a matter of curiosity, do you know who these people are? Since we are recording, have you seen this painting before? There's nothing to do with management as such. Yes? Who are these people? Do you know? Okay. Have you heard of a guy called? Yes?
Friends of Jesus.
Who?
Friends of Jesus.
Friends of Jesus. Okay, fine. It looks like they're wearing that kind of clothing. So this is Aristotle. This is a very famous painting. Have you heard of a person called Raphael?
Yes.
Not Raphael Nadal, but Raphael the painter.
Yes.
Okay, so the Renaissance painter. This is one of his iconic masterpieces. This painting is called the School of Athens. It's a useful thing to remember. I mean, it's a memorable painting for students. It's called the School of Athens. So the student here on the right is Aristotle, and the teacher here is Plato. Everybody knows Plato and Aristotle, right? Okay. So Aristotle was a student of Plato at the school in Athens called the Academy. There was a school called the Academy, okay, where they didn't have any attendance, any exams, okay, any quizzes, and there were no degrees given, but the end product was Aristotle, okay. So that just shows you that you don't need all this stuff for education. So there's a very famous painting. It's called the School of Athens, okay. It's in a place in Rome. It's near that St. Peter's Basilica in Rome. So it's a painting by Raphael. It's one of the high points of the Italian Renaissance. So it's a useful thing for students to be aware of. Okay, so let's start now. The spreadsheet that I told you about. Can you guys read at the back? Let's make this even bigger, maybe 20. So this is basically all you need to remember. Okay, this, if I just extend this a little bit, this particular bit link. So all you need to do is go to a new tab in your browser, okay, and type this. You don't even need to type this HTTP, just type bit.ly. You guys at the last bench can read this? Okay. So you just need to type bit.ly / this. Note that there's an underscore here, okay, after DURGAPUR, September 19th. So just, this is case sensitive. If you type this in a new tab in your browser, you will get the spreadsheet. And everything else that you need that I'm going to refer to today, okay, is going to be in the spreadsheet. All right. So this is all you basically need to remember. All right. Okay. So what I'm going to do, this red thing here, the video that we are taking now, this will be posted later on. I'll upload it to my YouTube channel, and the link to that video will be posted here. So everything that is being taught today will be captured here as well, and I'll give you the video link over here. Okay. So let's talk about. So this presentation will have two parts. Initially, as I said, I'll discuss a few pointers as to what you should do to be a good candidate for, first, initially an entry into a business school, and second, later on to shine in your corporate career. Okay. So let's start with that. In the second part, what we'll do is we'll do a fairly, hopefully, long class on financial markets. Okay. So typically people like to study stock markets. Usually they talk about it in terms of stock markets, but the appropriate way to study is to study it from the point of view of all markets, because there are certain characteristics common to all markets. So we'll see that. Okay. So is that okay for you guys? Is that a good plan? Okay. So let's start with the first part of our presentation, where we are giving you some. I'll just give you the navigation for this. Okay. This is the YouTube channel, where if you go, you'll see some. I'll show you the videos. So let's start with the first part. Okay. If you click this, okay, make sure you're clicking the first link, the online teaching resources, teaching learning resources. Have you guys heard of MOOCs? So this is the first part of the presentation where I'm giving you some general pointers as to what you should do. Okay. You guys are all basically, you've all finished your undergrad, right? You're finished or finishing? Finished or finishing undergrad. Okay. All right. Okay. So have you guys heard of MOOCs? MOOCs. S is a plural basically. The word is MOOC. MOOC. No? Okay. So MOOC stands for Massive Open Online Courses. Okay, so this is basically taking advantage of the internet, okay, and high bandwidth in most countries now. So what we are doing is, now if you see, you'll get an example if you look at this. Now edX is this is one of the portals. Okay, so mainly what you guys should focus on is on the left hand side. I've given you some other links also here which you can explore, but mainly these are the ones, and the ones which I've put in cyan background. Okay, these are the important. Let's start with edX. This is a collaboration between Harvard and MIT. It's actually run by an Indian professor, I think Professor Agarwal. So what they've done is, now there's this new trend in these MOOCs, so massive open online courses. All right. So this is actually part of what you should be all aware of as students. Okay. The new trends in learning. Okay, because knowledge is power. You know that. Knowledge is power. All right, a little boy from a village can become the CEO of a multinational company. It's all about knowledge, okay, and belief, and then willing to work hard and upskill yourself, okay. So one of the things they're doing is they're basically putting all the top courses from all the leading universities in the world, they're putting it online. And they're making all the course material available to you. And if you want a certificate, so there are two ways to do the course. You can do it as what we call auditing the course. If you audit the course, okay, AUDIT, audit, all right. If you audit the course, it means you sit through all the classes, just like any other student. You sit through all the classes, you have access to all the materials, but you don't sit for any of the exams and you don't get a certificate. Okay, that's called auditing the course. But as you can see clearly, if your perspective is knowledge, auditing is as good as getting a certificate. You see that? Getting a certificate is just a rubber stamp. You may have more knowledge than somebody actually who gets a certificate. So knowledge is really what matters. So you don't need to pay money for a certificate. Okay, if you have endless amounts of money, you can, if you want to pay, you can always pay. But my point is that you don't need to pay for the knowledge. The knowledge is free. Okay, so let's take one of these courses. Okay, so this is the portal. Okay, this is edX run by Harvard and MIT. As you can see, these are the first two names. All right, so let's take a course. Let's say you want to take a course in computer science. And that's another thing I would say. Everybody, whether you're interested in computer science, you feel you're not strong in tech, or you're not strong in maths, or this and that, I would suggest very strongly, along with the English language requirement, make sure you're very good in English. Your spoken English is very good, because that's what people will see first. Your written English can be a little bit bad. I'm not saying it should be bad, but you should improve that as well. But the first thing people are going to see is your spoken English. Okay, that's what they detect first. So make sure that's good. And then the other thing I would say is, in this modern age, people who are not tech savvy, even if they're not in the computer science industry or they're not a programmer, if people who are not tech savvy are going to be at a disadvantage, because technology is changing every discipline. So you have to make sure that you're tech savvy. You should be willing to look at new technologies, how that new technology helps you to do your job better, right? Okay, is everyone able to follow when I'm sitting down? Because I need to operate the keyboard. Is that okay, guys at the back? Yes. Okay. All right, so this is another piece of advice I'd give to you. Even if you have a little bit of a fear about computer science and programming and all that, you push yourself, just like learning to swim. Initially, everybody's afraid of the water, but you have to push yourself, because you have to learn to swim. So you just, grit your teeth, as we say in Bengali, dat mukh khichiye, just jump. Okay, so you just jump and try to teach yourself. Do a course. You don't have to become an expert. Do a course, get a feel of the subject. Okay, so it's very important to understand how programming works, how technology, how software works, because software is changing everything. Okay, so do this, take a course from here, computer science. All right, this is, maybe the zoom is a little bit too much. I don't know what the right zoom is ever. Okay, but you can take anything. You can take this course from Microsoft. I don't know if these companies, I don't know if they're actually going to do it for free, but you can take this. Okay, let's say take this, there's a certificate, but you can take Dartmouth, and I don't know who this IMT, I don't know if it's our IMT Ghaziabad, but there should be some courses where, as you can see here, they're trying to price it. Okay, that's for the certificate. Okay, but this is not a good thing actually, which they're doing now, because earlier this site was, try to look for courses where you can audit the course for free. Okay, there are, let's take start programming, okay, with Python. Okay, these are okay, so you can do this. Okay, UC San Diego. Okay, let's say you do this course. Okay, and you sign up for this. Obviously you have to register for this website. Okay, registration should be free, and there are a lot of courses you'll find. Dig around for courses where you can access all the materials for free. Now do this course, Python for data science. Okay, I'm just giving you, you don't have to do this, you can pick some other course. Okay, I'll show you some other courses you can do, introductory. So try to do as many of these courses as possible. So I've shown you one platform. Now you guys know how to use it. I don't have to handhold you. You know how to use it. You saw the subjects. Okay, so computer science is one of the subjects. You can do some other subject. Okay, you're free to roam around. Okay, so here you can see one more. I'll show you one more place where you can get all the MIT courseware. MIT also has an introductory computer science course which uses now you can see here all the MIT courses. You can see all the course materials, all the lectures. Okay, there is a lecture, there is a link for Yale also. Here also Yale courses. Many Yale courses have been put online. You can see all the course with lecture videos, everything. Okay, so you can do those courses, and as you do the courses properly, do it sincerely, make sure you master everything that's there in the course, okay? Make sure your knowledge absorption is 100%, and then you can put it on your CV. You can say that I did this course. Like Yale University has a very interesting course there's a course on the philosophy of death, okay, which has nothing to do with computer science, but it's a very fascinating course. The course itself is called Death or something like that. So it's a philosophy course, okay? But even if you do it properly, understand what is there and absorb the content, and then you can put it on your CV saying that I did this course online, okay? So if people ask you what was in the course, at least you should be able to talk knowledgeably about the course. That's what matters. If you're able to talk knowledgeably, I don't think any reasonable interviewer is going to mind that you don't have a certificate. I don't think any reasonable person will mind, but you should be able to talk authoritatively on the material. Are you following what I'm saying? So explore these portals, okay? So you can see Yale also has many courses. We can just have a look at some of them, okay? So MIT also, you can see all the different, here you can take some management courses. You can see what is taught in management courses. Here I would look around for a computer science course somewhere. Electrical engineering and computer science, they have an introductory course on Python, so look for that, okay? And don't have a mental block. Try to learn about these courses, okay? So this is the first part of the lecture, which is where we are within the first module, okay, where we are talking about what all you need to do. So is this point clear to everybody? Okay, go explore this, where this website is available to everybody. I'll just make sure that it's, yeah. So this is, anyone who has the link can access, and the way you get the link is you just go here, and from there you just click through, okay? All right, so the next one I would say is, okay, let's go here. If you want to get to, then I'll just close these. Okay, so here are some of the Yale courses. There's a course on financial markets. This is a little bit theoretical. This guy is actually a Nobel laureate, but this is a little bit theoretical, this course, but still you can do it. You can see all the different courses that are there that actually did them. This is the literature course. You can do that as well. Okay, philosophy. I've actually done this course. Okay, I did this online. Okay, it's a very interesting course if you're interested in philosophy. So you get a lot of interesting courses. You can explore it on your own. I'm going to close this now. All right. Okay. So what we got here is, when I click on this, you're taken to my YouTube channel, where what I do is, just like I'm doing for this lecture, okay, I'm actually, this will take you to the playlists, okay? This will take you to the playlists, and you can see all the courses. Every course that I do, all the lectures in my course, I record the session like this. The screen video and the students' questions, teacher's voice, everything is captured. So there you can actually get a flavor for what is taught in a typical business school, okay? So some of this and legal aspects of business, some of the courses, some of the videos are a little bit hidden right now because we have a course coming up. I don't want some of the solutions to be available to our students, so some of them are a little bit hidden. But other than this, you can look at all the finance courses. Everything is there, okay? You can see this one has only got 6 videos because this course is it's running right now. Okay, so every day when I do a session, I upload. So this will have 20 sessions. So we've only finished 6 classes, so it's got only 6 videos. Okay, all right. So you can see all these courses here. What I would suggest what you do is, okay, before I come to the finance courses, let me talk about the miscellaneous lectures, the full playlist. Okay, so here what you should do is go to one of these courses. Okay, here. Okay, I would suggest that in this particular everyone is familiar with playlists on YouTube. It's a theme, right? So these are themes. So miscellaneous lectures has been put into a theme. These are, in fact, today's lecture will also go into miscellaneous lecture later on. Okay, but I'll give you the direct link into this page over here. I'll give you the link to today's lecture here, but it will actually be also a part of miscellaneous lectures. So what I would suggest you study is this one. Look at this video. So this is something I prepared for. So here, the fact that we are not capturing the screen audio will be a problem, but doesn't matter. It's
rule is essentially, if you start preparing yourself, of course, you have to monitor business news on a daily basis. You have to become like a news junkie. Okay, so here,
this is actually advice that I gave to one of our BCA students, and I've just put it here. And so what you can do is you can actually go through this course, go through this video, remember this title, okay? Go through this video, and then here you will find, in the description here, what I've done is I've referred to a document here. You can see this document that I'm referring to here. This document, you can actually access this document by going to the here. You can go in, you can access this document, sorry. You can go here in the link. This is the link to the document that I'm referring to there. Are you following that? Okay. So here you'll find all the links. So you can just go to this video, watch this video. This will give you a, so I'm not going to run through this part once again, okay, because you can watch the video. So you can actually see here what you need to do to keep in touch with business news. So the idea here, the central idea here, this is basically a how-to, okay, how to keep in track, how to track markets, how to track news, okay. So the idea here is that as a good business student or even a good candidate for a business school position, okay, to be a student in a business school, you need to show that you have an interest in the world of business, okay, and that you're continuously following the news related to business. Are you following the idea here? This is the idea. So you need to be able to show whether you're graduating from a business school, looking for a job, interviewing for a job, or interviewing to get into a business school. You need to be able to show the interviewer that you are completely immersed in the world of business, okay. So this video actually gives you a guide, okay, so it's 22 minutes, so I'm not going to run through that. Watch this video and follow the instructions. How are you going to actually, what is the modus operandi through which you are going to track all the different markets and different news items, etc. Okay, so do that. I think here itself I've mentioned Bloomberg Technology somewhere. I don't know if I've mentioned it. I'll just briefly mention it in case I haven't. Okay, so let me just talk about Bloomberg Technology. This is another along the lines of technology. I would strongly recommend. I follow this every day. Okay, go to this their YouTube page. Okay, so what these guys have is, I want to just close this. Okay, I may have already referred to it, but if you just look at the videos, what these guys are doing is kind of every day. Yeah, you see this full show. Okay, so they have a so Bloomberg is a major news organization, and then they're running actually a program from San Francisco, because that's where Silicon Valley is. Okay, near Silicon Valley. So they run a program. It's about a 45-minute program, 5 days a week. Okay, where they're covering all things technology, everything related to technology, all the new companies that are coming out, what is happening, Facebook's privacy concerns. Amazon just came out with a new Echo device. Okay, so where this anchor was asking the Amazon VP of products and devices and services about the privacy concerns, because the problem with this new Echo device is that the it's an opt-out feature. So initially the Echo device is listening to your conversations and storing them and sending them back to Amazon, so that the learning machine, all the machine learning algorithms can pick up and learn a little bit. Especially they're launching in India also with Hindi. Okay, they're launching with Hindi, so they want to teach the machines Hindi. So what they've done is actually they've kept this as an opt-out. So when you buy this device, unless you specifically opt out, all your conversations are getting recorded by this Echo device. Okay, and it's sorry, it's in the Echo. It's I think the Alexa or something like that, right? The new. So the new version, it just came. I was just watching this program 2 days ago. So I make it a point, even though I have nothing to do with technology, I'm not interviewing for an MBA position or whatever, but I make sure I watch this because I need to keep in touch. So I'm learning about things all the time by watching this program. Okay, so it covers, and it'll give you a very good understanding about the interface between technology and business, which is very important to understand, because you can see here instances where technology is being applied to medical devices, okay, hospital treatment, this all kinds of applications of technology. You'll get a very good feel. So one of the things you should do is watch this program every day. Even if you miss it for a few days, go back and catch up. Okay, so so whatever I'm telling you, obviously, as you will see, involves a lot of hard work. Okay, it's a lot of hard work, because obviously you can't get anything good without hard work. Okay, everything comes with hard work, but just by sitting at home and watching TV, you're not going to get anything done. If you want to achieve something in life, you have to work really hard. Okay, everything comes from hard work. So whatever I'm telling you involves a lot of hard work. So you have to be willing to put in that hard work. Okay, you know, in Bengali we have this saying. Have you heard this? Alosho shakol doshe rakor. You have heard this saying? Okay, that laziness is the root of all evil. I don't know if you these days, but we were growing up, we were told this all the time. Okay, and it's actually very true. So on that point, which is, I mean, our language, I think, is the only language which has this expression, that alosho shakol doshe rakor, which is, if you see, actually, I don't believe that there are any stupid people. I don't believe this distinction between stupid people and smart people. I think it's more important to distinguish between lazy people and hardworking people. So that a stupid person is actually a person who's too lazy to do the hard work to become smart. Are you following what I'm saying? So your brain is actually a plastic entity. Your brain is a plastic entity. The more you bombard your brain with information, the brain is a processing engine, okay? The more you bombard your brain with information, the brain will keep on working harder and harder, it will get stronger. Okay, because it's all a bunch of connections, okay, network connections. So you have to have this vision about your brain. That is, if you bombard, most of you, if you feel that, okay, I don't know anything, maybe I'm stupid. No, I think it's more likely that you're lazy. You're too lazy to do the hard work required to become smart. Okay, so have that idea in mind. So one of the things you should do is follow this program. This will give you a very good understanding of what's happening in the world of technology. Okay, and then you can apply it, and you'll find that later on, as you get familiar with this, and even if you find that, suppose you're watching it and you're finding after 2-3 days that I'm not able to follow anything. Okay, doesn't matter. Just keep pushing. Just follow the advice. Okay, just do it every day, like brushing your teeth. Okay, just do it every day as a matter of discipline. Today you will understand only 5%. After 3 months you'll understand 20%. After 9 months you'll understand 30%. That's how it goes. Okay, but if you stop listening just because you're not able to follow, then you won't get the benefit. Are you following what I'm saying? Okay, so it's not that you can't understand anything, because they're not speaking in Japanese. So you'll understand, okay, there is this new device called Alexa Echo. I don't know what it is, what does it really do, but at least you know now, your brain knows that there's this new device, Alexa Echo, or whatever it is, that I don't know what it is. So later on when you hear something about it, you'll pick up some more information. So that's how the brain picks up information. Okay, so make sure you bombard. The idea should be there in your head clearly. You should have this vision that I need to bombard my brain with information continuously. Okay, like saturation. Have you heard this concept of, it comes from warfare, saturation bombardment. Okay, that's what the Allies did to places like Dresden and all that after the Second World War, after Germany lost. They just bombed it into the ground. Okay, so you have to engage in saturation bombardment of your brain with information related to the world of business. Okay, so that's what we need to have. All right. So this is covering more or less, okay, and on the point of, is this point clear on the technology part? Look at this video. I would also say, look at yeah, we have time, no? How much time do we have?
For your session,
Only half an hour. I thought we had 2.5 hours. Oh, everybody's getting restless. People are getting restless. Okay, we've only done 22 minutes. You are getting restless. No, she's not getting restless. Nobody's getting restless. If I directly ask, they're not getting restless. Okay? Okay. Alright, let's take a little bit of time because we want to have a fruitful session. Okay? So that you can learn maximally from whatever we are doing. Okay. Alright, so here you should follow this lecture under miscellaneous lecture. Follow this. This you don't need to worry about. You can watch this lecture also, preparing for an MBA and beyond. These are specific lectures, international trade. This is not of general importance. Okay, MBA student guidance, this is also important. Okay, this is from a mentoring session. So follow these videos: finance careers, student guidance, and preparing for an MBA and beyond. There will be some overlap in the content. Okay, don't worry about that. Tracking markets, technicals, you can follow that, and careers in business. Okay, this is pretty much I think those first few videos are more important. Okay, now last point on finance. Okay, when you see that if you go to my website, you will see the দরজাটা বন্ধ করা যায় একটু, পিছন থেকে আওয়াজ এলে খুব ডিস্টার্বিং লাগে। ওই কাজটা বন্ধ করা যায় কি? Just make sure that we don't get disturbed. Okay. All right. Now going back to the playlist view on my page, okay. Now you'll see there are various finance courses. So one of the concerns you might have, one of the curiosities you might have is that you want to know what is typically taught in a finance course, okay, or you want to follow what is taught in MBA finance. You want to learn a little bit ahead of time, okay. So for that I would recommend, you'll see different courses here, but there's a sequence being followed. So this is the introductory course, so follow this. Do the summer 2019, although the years look like they're upside down, but follow this sequence. Do summer 29 because IPM comes first, okay. So do this course first, do this one first, then do this one, and then do this one. Okay, these are all completed courses. Okay, this one unfortunately doesn't have all the videos because I started the video recording halfway through this September 2018 course. Okay, but you'll still get a good flavor of what is being taught in a finance course. Okay, so we'll get into that today as well. We'll start that. So this is the initial part of the lecture. Okay, now we'll go on to the second part. Okay, where we try to get a feel for what is involved in finance. Okay, which you were interested in, the stock markets and all those kind of things. Okay, so let's look at. I think we can close this. Okay, so what we are going to do is initially, since we are a little bit short on time, I'll skip through all these elements. Okay, I'll give you, what I'll do is I'll give you another link. Have some of you guys studied economics? You studied economics? Okay, I'll give you a link to a very good economics website. Okay, which is, I'm going to just randomly pull the special links that I'm adding. Okay, I'm just going to put it here. You'll remember it from today's session. Okay, I'm just going to put them here. So this is a link. Okay, you can click on it. This is a very good economics website which discusses economics from a non-mathematical perspective, but it's a very good conceptual understanding of economics. Okay, so I put the link there, so you don't need to remember the link. Okay, it's in your spreadsheet. If you open the spreadsheet, you'll have the link over here. All right. Okay, so let's start quickly with markets. Okay, what we do is essentially, I'm going to skip through a little bit through here and try to understand what we mean essentially by markets. Okay, and what we so let me just first tell you how why these so how we want to think about a market initially. Okay, and I'll tell you, I'll show you soon why we discuss markets in general instead of just stock markets. That I'll show you very quickly. Okay, so initially we have to have a definition of markets. Okay, what we do is we have a definition of markets where we say the market is a financial market. From a financial markets point of view, we define a market as a venue for the exchange of assets. Okay, you think of it when you go to the vegetable market, you want to go buy potatoes. So the vegetable market is a venue for exchanging. Now we want to think of it in general terms as, instead of looking at exchange of potatoes for money, we will think of it, everyone understands asset. Everything is an asset, like a building is an asset. Okay, you can have even intangible assets like intellectual property. All the copyrights that Apple holds, Google holds, these are also intellectual property. These are also assets. So we think of a financial market as a venue for the exchange of assets. Okay, we're going to think of a financial market as a venue for the exchange of assets, and within assets we include the idea of goods. Okay, so all goods are assets, but all assets need not be goods. Okay, in the sense, so potatoes are a good. Okay, sugar will be classified as a good, oil will be classified as a good, and all of these are assets. But certain things like money, okay, are etc. We won't really classify them as a good, but they are, like, say, different currencies like Japanese yen, okay, or Canadian dollars. These are also assets, but they're not really goods. Okay, so this is how we are classifying it. So we are basically talking about so the basic idea of the definition is that a market is a venue for the exchange of assets, and the venue can be either physical, which you're all familiar with. You go to a vegetable market and you buy vegetables, but it could also be a virtual venue like this one. Okay, if you see this, if we just if we pop this out, okay, you can see here, is the font big enough at the back? Can you read all that stuff, copper and all that? Okay, so here you can see basically these are all electronic venues. Right now, one of the problems is the market is closed because Saturdays and Sundays international financial markets don't operate. Okay, so the Hong Kong gold market used to, actually that's why you can see the market is all halted. All the markets are halted because it's a weekend. Okay, so many years ago in the mid 80s or 90s, the Hong Kong gold market used to operate on Saturdays, but they got hit by a lot of speculators who were trading on news, etc. So eventually now that has stopped. No market operates on a weekend. Okay, so everything is Monday to Friday. So you can see here there are different types of, some of these are not currencies, some of these are currencies. These are obviously currency markets. This is an oil market. Okay, this is copper, gold. You can see that you can add many other kinds of sugar, wheat. Okay, this is an equity index. the Japanese 225. This is the equity index. Okay, so everything is closed right now. So that's why we are actually giving you a very general definition of markets as a venue to exchange assets. Okay, so gold could have been treated as a good, okay, but we are treating it as a general form of asset. Okay, and currencies are also assets, and stock indices, these are also assets. Okay, these are your Nasdaq 100, which is a US equity market. Okay, so these are actually a market is a venue for the exchange of assets, and this is an electronic venue. Okay, right now I can't trade on it because the market is halted. Okay, so it will give me, so but otherwise I could have traded on it. Okay, and if I traded on it, this would be an electronic venue. This is not a physical venue. Okay, this is a broker which is based in New York. It's actually a market maker which is based in New York. Okay, so they have this software, and through this software I can buy and sell. Okay, so you can see I was trying to sell gold, but obviously I can't do anything right now because the market is closed. Okay, but I can probably, they might even accept an order, okay, to sell. They'll tell you that they will execute the order later on. Okay, so this is what we mean the market. The first idea is that a market is a venue for the exchange of assets, and you can have various types of assets. Some of them will be goods, some of them will not be goods, but all of them will be assets. Okay, is everyone following so far? Yes. Okay, so now let me show you a particular type of example where okay, so okay, let me just tell you one more, give you one more idea here as to why. Because everybody in India is always looking at, they're always thinking in terms of stock markets. So that becomes a problem. I'll tell you the right way to think about markets, okay? And why we should not be approaching it from a stock market only point of view. This is a pretty good website actually. You can see, I'll just give you the link, you can, so everything that we are doing, wherever I see a useful link, I'll paste it into your spreadsheet for today. So you will be able to play around with that website, okay? I'll do the same for this one. What happened here? This is an ad actually, I think. Okay, so this one also I'll give you. This is a very useful website. I have not paid for the website. I'm using the free services. Okay, so they want to keep on trying selling you. They want to keep on try to sell you the paid version, but it's a good website. Okay, it's very good if you're even if you're following Indian equities, you'll get a lot of intraday data. So I'm pasting this also, but you'll have to create a login. Okay, you can create a free version of the login as well. All right. Okay, so let's just look at this. Okay, here. Let's look at this futures display here. Okay. All right. Now, the reason I don't want to talk about markets, when we talk about markets, I like to teach people about the general principles of markets. Okay. You saw we had a definition of markets as a venue where we exchange assets. Okay. We'll see how this becomes useful later on. The reason I don't talk only about stock markets, because there are certain general principles which are applicable to all markets. Okay. So I think the correct way to study markets is to look at the general principles, and then of course when you study individual market segments, individual asset classes in detail, there are certain peculiarities. Are you able to follow what I'm saying? Like if there are certain characteristics common to both male students and female students, then it's not proper for me to just teach you, say if I'm teaching you about, just teach you about female students. But there are certain characteristics common to both male students and female students. So it would be better to teach you generally about students and what are the general properties of all students, whether male or female. And then later on we can see whether female students have some particular characteristics. Maybe they are more serious. Maybe the male students are more easily distracted. That we can discuss as a second level discussion. Are you able to follow what I'm saying? Okay. So we should always study from general principles, and you can see why. Look at this. These are all stock markets. Now, does this look like a stock market? What I'm highlighting right now? Gasoline. Does this look like something which will be traded on the stock market? Yes or no? Is my question clear? Is my question clear? Okay, gasoline is an American term. What about this? What about this? Have you guys heard of this product? Is this something that seems to be traded on a stock market? No. What kind of product is this? What is common? Okay, let me give you a clue. What is common to this, then this, then this, then this? Yes. Okay. What is common to all these things that I'm showing you right now? Can we devise a normal term? Can we define a common term for all these things? Goods. Can we have another word? Somebody said commodities. Okay. Consumable goods, you can say, yes. Okay. Some of them may not be directly consumable. They may be industrial products. Okay. Okay. Gold is not really in that sense consumable. It's okay. I could have showed you gold as well. So this is why we don't talk about only about stock markets. Okay. This is the right framework to use. Okay. Here. Okay. It's a little bit. We can make it a little bigger. You can still see everything. Okay, so we are not going into that right now. So this is the right way to look at it. Okay, so here what I showed you, all the stuff that I showed you, mainly those are futures contracts. All that stuff that I showed you goes into this box. Are you able to follow? Futures are a type of instrument. Okay, so usually people say stock market. Actually, that's only a narrow box. Usually when you're talking about stock markets, you're only at this intersection. These are mostly spot markets. These are traded on spot basis. So you're only talking about this box. So that's not the right way to study global financial markets. You should study it from a broad canvas perspective. Okay, you look at understand all asset classes will have markets and they all function in the same way. There are many common properties. So the right way to study markets is like this, to look at all the major asset classes. So we'll just explain, we just looked at the asset class called commodities. Okay, you can see within each asset class there will be many markets. Okay, asset class is a new term that you're learning. It's a new term, right? Asset class. So what is an asset class? Is nothing but a collection of markets which are similar in some way. Okay, so if we go back to our exercise, can I say there's some similarity? Cotton, orange juice, coffee, lumber, sugar, gold, silver, platinum, copper, palladium, wheat, corn. Can I say there's some similarity here, guys? Is it fair to characterize all these as commodities? Everything is commodities. You can actually have a sub-classification within commodities, which we do have. Soft commodities, energy products. Okay, if I want to do only energy products, I will do this. West Texas is the North American crude oil benchmark, which we have just started to import a little bit now. Mainly we import something similar to Brent crude oil, gasoline, heating oil, natural gas, ethanol. This would be our energy subcategory. Within commodities, this would be a subcategory. Okay, are you following? Right? So it is like you have male students, female students, and within female students you can have female BCA students. Okay, you have a subcategory. All right, so this is how you look at markets. All right, so you can see here all the different types of markets. Now we have another asset class. So this is what we mean by asset class. This is all commodities. This is one asset class because they're all markets which there's a group of markets which move together, which tend to be related in some way. Okay, so obviously these are not related to currency markets. Now we go to another asset class. We go to another asset class which you can see here very well. These are the kind of charts you get. Okay, here can you see these markets? Everybody can read, the font is big enough. Can you see all these markets here? What is common here? What is this? Which market is this? Currency market. And and we said the market is a venue for the exchange of assets. Okay, so can you tell me what are the two assets being exchanged in this particular market where I have my cursor? Correct, very good. Okay, so this particular market, so you can now see the definition, the theoretical definition. You can see it in action. Okay, it's a venue for the exchange of assets. Okay, venue could be either physical, go to the vegetable market and buy potatoes against Indian rupees. Okay, or it could be a virtual venue where you go there, and now this software is not working because it's a Sunday. But on a working day, on a weekday, you can buy dollars against yen. As he correctly pointed out, this is a market, so you see it meets the definition of the market. You always have two assets which are being exchanged. Okay, and in this case they happen to be both currencies. Both are currencies, US dollars against Japanese yen. Okay, what is this one? Your Chinese yuan. Okay, this is a little trick. This is like a quiz trivia. Okay, but this is actually Chinese yuan. Most of you are going for Chinese yuan. Okay, no, it's actually not Chinese yuan. This is a little quiz trivia. CH is the, anybody did stamp collecting? Yes, somebody said Switzerland. CH is the official name of Switzerland. It stands for Confederation Helvetica. Okay, so CHF is actually Confederation Helvetica franc, so it's a Swiss franc. So in this market we are exchanging dollars against Swiss francs. Is this clear? Okay, so this is just, I was just playing around with you guys a little bit. Okay, so now you can see one more, let's take one more example. So you can see all these are currencies. Can you see them? All are currencies. All of these are currency markets. This is what? Euro against British pound. Okay, this is a very active market right now because of all the uncertainty around Brexit. Okay, and what it will do to the two economies. So there's a lot of activity on the euro sterling market right now. Okay, so these are currency markets. Now where do we put, now why do we study, why is, now if you just study stock markets, you don't learn anything about the currency market. Are you following? Okay, so, and the currency market is the world's biggest market by a wide margin. It trades about 5.1 trillion at the last count. It used to be 5.3. $5.1 trillion per day of traded volume. Okay, in the currency market, the global currency markets. So it's actually the biggest market by far. So if you just study stock markets, in most of the cases in India, with most of the business schools, we are teaching only stock markets mainly and little bit of bond markets. But that's not the right way to cover financial markets. You have to look at all the major asset classes. Okay, so this is, are you guys following the approach? Okay, you have major asset classes. We looked at equities, we looked at commodities. So we haven't looked at equities yet. We looked at commodities and currencies. Equities, if you look at in this market itself, there are many indices. This is a stock market. This, have you heard of the Dow Jones? Dow Jones Industrial Average. Okay, so when you see my videos, those videos that I showed you under miscellaneous lectures, there are some guidelines. You must get familiar with US markets. Okay, the US is the biggest economy in the world by far, and you must start following US markets. Okay, even if you don't understand much initially, and start following the US economy because it's the biggest economy, and even in your lifetime, okay, it is going to remain by far, especially if Trump wins a second term. Okay, because his policies are very pro-business. Okay, the economy is booming under his policies, tax cuts, deregulation, very tremendous economic boom. And if he wins a second term, the US, distance between the US and the rest of the world will become even greater. Okay, so you hear a lot of people in India. We have a lot of such people saying that India and China will overtake US. Okay, that's all total garbage. Okay, I'm telling it to you, and it's recorded. It is total garbage. People who are saying this are morons. They don't have any understanding of what makes the USA such a strong economy, because they have free markets, they have free capital markets. Think about it. Both India and China have closed capital accounts. We do not allow free movement of capital. Okay, the US doesn't have a closed capital account. Okay, so if you're such a strong economy, what do you fear? Why do you keep your capital accounts closed? Are you afraid that people will run away with their money? If your economy is so good, people should pour into India. So you shouldn't have any fear. You understand this? Nobody highlights this. Think about it for a moment. Okay. So somebody is claiming that I am running a great pathshala in my school, but I don't allow my students to hear about any other schools. That means what? That means I'm afraid that if they hear about other schools, they might find a better school. If I'm very confident that I'm running the best school in the world, you can go anywhere and look. I'm confident that you'll come back eventually to my school because it's the best. Are you following the logic? Okay, I think it's very important for you young people to be given this part of the lecture, because there's a lot of garbage floating around that India and China are going to overtake the US. It's not going to happen. Forget about my lifetime. It's not even going to happen in your lifetime. Okay, the US will remain the dominant economy. So therefore, it's very important to follow how the US economy is doing, what is going on there. Okay, deregulation, tax cuts, what's happening in the energy sector in the US. Then you get to see what a developed economy really looks like. All right, are you getting the message there? Please make sure you follow that. You guys are not familiar with the US stock indices, so when you follow my lecture there and that miscellaneous lectures, it will give you some guidance as to what you have to do, what channels you have to watch to follow US markets. Okay, and everywhere the same thing applies. Whether you don't understand or you don't understand, just do it. Just keep following. Do it for 6 months, 9 months, then you'll start to see the benefits. Don't give up because you can't follow just in 2 months, okay, or 1 month. All these are US equity indices: Dow Jones, S&P 500, NASDAQ 100, Russell 2000. This is a Japanese equity index, Nikkei 225. This is a European equity index. Okay, equity index, you are familiar with the Nifty 50. Everybody knows that that's the Indian equity index, Nifty 50. Okay, now these are the European equity index. This is a German index. Okay, this is actually a equity volatility index for this S&P 500. That will be too advanced for this session, but this is a German equity index. So all these indices, all these equity indices, where do they go on our spreadsheet? They go here. These are under equities. they go here at the intersection of equity and usually spot. Okay, are you following the way this framework is used? These are all different types of instruments, and on this side we have the asset classes. Okay, equities, commodities, currencies. Okay, and then here you have all the instruments. So futures, forwards, swaps, options. These are all different types of instruments. Okay, and you have the intersection, and spot is also one type of instrument. Instrument only means it's a particular type of contract. Okay, it just means it's a particular type of contract, so each party has different obligations. Just like when you have an air conditioning unit, you have an annual maintenance contract for the unit. Okay, that has certain characteristics that the vendor will do this and you will make certain payments. Okay, so instrument is just a type of contract. Okay, so you have this. Can you see now why we need this kind of a framework to look at asset classes? All equity indices will all go into the equity asset class. Okay, and here, and so similarly you will have bonds. Okay, it's a little harder to see bond prices, but you can see it still here. You can see here certain US bond prices which are given here. 5-year note, 2-year note. Okay, these are actually US Treasury debt securities. Okay, these are 5-year debt securities issued by the United States Treasury. These are 2-year debt securities issued by the United States Treasury. Okay, so these are actually, so these would go into this box. There are many other types of debt securities you can have. These would go into this box. Okay, these are actually all futures contracts, so these would go into under debt, at the intersection of debt, and I need to reduce this, right? Okay, at the intersection of debt and futures. Okay, so these are actually futures contracts on debt securities. Okay, are you able to follow this framework? Okay, now let's look at one more aspect of markets. So we have followed that markets are a venue for exchanging assets. Okay, and you can see here what the different assets are, and in the particular case of currency markets, the peculiar thing is that both the assets are currencies. Okay, you can have dollar rupee also here in this case. Okay, so both the and so let's look at one more thing here. Okay, let's look at the second idea within markets is that when you're looking at markets, okay, when you're looking at there are 3 types of players in markets actually. You have, and one of the important types of, we won't get into all the 3 types of players, but there one category of player which is very important in the market is what we call a market maker. Okay, there is a category of player called a market maker. Okay, so and these guys, what they do is they are making prices all the time. Like, have you seen when you have to go abroad, have you seen these money changer prices? You have seen prices on the money changer. You notice there are always 2 prices. There's a buying and selling price. Have you noticed that?
Yes,
right? There are two columns always. For every currency, there are 2 columns. For every currency pair, dollar against rupee against Singapore dollar. If you're going to Singapore, Singapore dollar against Indian rupee, there will be 2 prices. There will be 2 columns, buying and selling. Okay. So here it's talking about sell and buy. It's actually reversed. This is from the user's perspective. Okay. So you have to understand that this is basically if you look at this from a market maker's perspective, okay, you have to understand, let's understand this concept of bids and offers. Have you heard this term? Have you heard these terms, bid and offer? Okay. So now imagine, yes? Somebody heard bid and offer?
Yes, sir. Bid is sir, telling the money of in which the contractual money.
Okay, you're talking about bids and tenders and all those kinds of things. Bidding for a tender, okay, okay, that's also correct. But we are talking about a different kind of bid now. We are talking in the context of financial markets, okay. So his question is very good. He's talking about when the government gives out an invitation to tender, okay, and then you submit your bid, okay. That is called tendering, okay. You're submitting your bid. So he's correct actually. So this also shows you how finance is a very contextual subject, okay. In many finance textbooks, you will find that finance is being treated almost like a mathematical subject, which I think is actually not correct. Okay, it's not the right way. Even economics is very mathematically taught, which I think is highly, it's actually a problematic approach. I think is not correct. So finance is very contextual. As you can see, his definition of bid is not wrong. It's correct. It's just that right now I'm talking about a different context. You understand what context is? Okay, so the background in which we are having the discussion is slightly different from his background. His statement is correct, but in this statement, in this context, bid has a different meaning. Okay, so the bid and the offer, imagine here that we are writing bid and offer over here, okay, where it says sell, on the top of that I write bid, and where it says buy, on the top of that I write offer. Okay, offer is also sometimes called ask, ASK, Okay, like ask me something. All right, so here what you have, like, so if you are imagining these prices as, these are actually prices shown by the market maker. Okay, so these are, this particular broker Oanda, okay, is actually a market maker. So you can actually use this site as well, but you need a telephone number. They don't allow people from India to register because of our currency controls and stuff like that. So you can register on this if you have a phone number or information. If you have a phone number of anybody who's outside India, any cousin living in London or Dubai or somewhere, if you have a phone number from them, you can register in their name and create an account. Okay, there's nothing wrong with that. You can play with this site. You have a lot of different markets which you can practice on. These are the news and the prices are actually real prices. Okay, all right, so these are actually, here it says bid. Imagine here it says bid, here it says offer. Okay, so what's happening now? If you want to go into the gold market, okay, if you want to go into the gold market, all right, and you want to buy gold, at which price? Both of you can, all of you can see the prices here. I think I'll try to make it a little bit bigger. Font. Yeah, it's already at the maximum font. But anyway, you can see the prices. You can see the difference here, 96, 98. We'll just ignore the decimals. We'll just say 96 and 98. Okay. Last two numbers we'll talk about. Is that okay? Everyone can follow? So there are two prices now. Okay. First of all, before we get to the bid and offer, in the gold market, what are we trading here in the international gold market? Remember we said a market is a venue for the exchange of assets, right? So that means there must always be two assets in any market. In any market, there are always two assets. If you go to the market to buy sugar, you are exchanging sugar against Indian rupees. Okay. If you are buying wheat in Tokyo, you are exchanging wheat against what? Japanese yen. Okay. Usually that will be the convention. Now the international gold market, what are we exchanging? One obviously is gold. One asset is gold. What is the other asset? What currency? Some are saying Indian rupees, some are saying US dollars. Okay? Yes? User's currency, yeah. But actually he is correct. It is US dollars because there are certain, now here you get what you learn. One more thing about international financial markets is that once again it shows you how the US is the dominant economy. Many globally traded products like steel, iron ore, okay, copper, okay, all of these, cocoa, many of these, cocoa is traded in sterling also, but many of the, and oil, most importantly, oil, gold, silver, platinum, palladium, all the precious metals, most of the internationally traded commodities are traded against US dollars. Because US dollars is the most dominant currency, the US is the most dominant economy, okay? The US is the most, the dollar is the most dominant currency. Wherever you go, people will accept dollars, okay? So if I go somewhere in Japan and I try to pay with Iranian riyals, do you think they'll accept me? They'll accept those riyals, right? So that's why you see the latest round of sanctions against Iran. What has the US done after the last bombing of the Saudi oil fields? Are you following all that news? Iran bombed they attacked the Saudi oil fields. So the last round of sanctions is they've shut them out of the US dollar financing system. They've cut the central bank's link to the US dollar payment system. That means you're basically gone. Your economy is basically gone. Any economy in the modern world, if we cut you off from the US dollar payment system, you're dead. Okay, so this China is doing a lot of against the US. But if the US cuts China off from the US dollar payment system, their economy is just going to collapse. Okay, it will just collapse in a month. So it is so important to be connected to the US dollar payment system. Everything is done in US dollars. Okay, so in this market, the two assets are gold and US dollars. Okay, gold, copper, steel, iron ore, everything is traded globally in US dollar against US dollars. So the two are gold against US dollars. So what does this mean? 1496 and 1498, two prices. Let's take 1497 in the middle. Okay, 1497 gold price is shown as 1497. What does that mean? 1497 ounces of gold for $1 US. Is that what it means? Price has to have a meaning, no? US dollar against Indian rupees 76, that means 76 Indian rupees for $1 US. Similarly, in the gold market, the international gold market, the price has to have some meaning. 1497 middle price. What does it mean? 1497 US dollars for 1 ounce of gold, or 1497 ounces of gold for $1 US? Second option? First one. Okay, so in this case she is right and another person here is right. So the price, what does this mean? It means you need $14.97 US for one. This is actually the unit of, another thing you have to know in every market is what is the unit. Okay, potatoes may be traded in kilos, bananas may be traded in a dozen. Okay, here gold is traded internationally in terms of 1 troy ounce. Troy ounce is different from ounce. You can Google it and see what is the exact difference. But troy ounce is a different measure from ounce. Okay, so gold is traded in 1 unit is 1 troy ounce. Okay, so the price here, what this means is $14.97 US for 1 troy ounce of gold. Okay, if you want to see how the price has moved, we can look at the gold price and see how the gold price has been moving. All right, so this is where you look at charts. Now you can see how dramatically it has moved. So through this kind of software, you can see the chart and the movement. You can see it reached a high of around, say almost $1930. $1930 was the high, was around in September 2011. Can you see the cursor at the bottom here? It's around September 2011. Now this is the international gold price. This is not the Indian gold price in terms of price per 10 gram and all that. So that's not, even though we are one of the second biggest top number 1, number 2 buyers of gold, but the international gold market is a global market which trades round the clock, and the main physical center of gold trading is London. Okay, for all precious metals, the main trading center is London, but you can trade it round the clock. Okay, so this is what happens when you don't have an open market. We don't have an open economy. If we had the brains to be an open economy, today Bombay might have been a leading center for trading gold. But we are not, because we have capital controls. Okay, so this is one of the problems that you have because of capital controls. So you can see how the gold price is moving. So the price of gold is fluctuating. What is not fluctuating is, this is always the price of 1 troy ounce of gold. So that unit measure is not changing. Okay, so one asset is not changing. What is changing is price. How many dollars you need to buy that 1 unit of gold, that keeps fluctuating based on supply and demand. Yes, you guys are getting impatient.
No.
Everybody's getting impatient, or you are getting more impatient.
No. Actually, I am seeing they are replying. That is very good.
They are replying. Okay, good. So as long as you guys are okay, we'll continue with the session. Is that okay? When you feel I need to stop, just hit me over the head with a hammer or something. Otherwise, I won't stop. Okay, fine. So we have enough time. We can. Are you guys enjoying the session? Okay, you're learning certain things. Okay, good. So let's continue to learn some important concepts. Okay, all right. So we have learned that a market is a venue for the exchange of assets, physical or electronic. Okay, you can see that there are always going to be 2 assets. You learn about asset classes. You can now learn about one of the most important markets in the world, which is the international gold market. Okay, so now you can see what is fluctuating is the gold market, is the number of dollars required to buy 1 ounce of gold, 1 unit of gold. Okay, so that is what keeps on fluctuating, and you can see the degree of the fluctuation. Okay, so now let's come back to this discussion that we were having. Okay, I'll come back later to this another concept which we can cover. Let's see this too. Okay, so now we said in the middle you have 1497, and we determined that the what does 1497 mean? It means that you need $14.97 to buy 1 ounce of gold, 1 troy ounce of gold. Okay, is this clear? All right, now we talk about this concept of bids and offers. We said this is the bid, these are the market makers' prices. So we will just study right now that a market maker is one category of player in the financial market. Okay, so one category of player called market makers, what they do is they keep on posting prices, like your foreign exchange, what do you call them, the money changer. The money changer is also like a market maker. Okay, so you can see one example you guys are all familiar with. The money changer, one category of market maker. He is continuously posting prices for currencies. Okay, buying and selling of currencies. He posts what we call this two-way prices. Okay, he's quoting a bid and an offer. So that's why we say the market maker posts a two-way price. Okay, because there are 2 prices. I'll just have some water because I'm shouting continuously because I'm under time pressure. So I can feel the time pressure. Okay, so the characteristic of a market maker, and you have already seen one example in the form of a money changer, is that he always, for any market, okay, so these are all different markets, and this guy is making markets, this particular market maker, Rwanda, they are making markets in all these pairs, okay, in all these markets. They are market makers in all these markets: gold, copper, oil. So they post, one characteristic of market makers is they post two-way prices. One is called the bid and one is called the offer. Okay, so the lower one will be called the bid and the higher one will be called the offer. Okay, so now if you want to buy gold, now you are going to be a price taker. Just like when you're planning to go to Singapore, you go to the money changer and you want to buy Singapore dollars by giving your Indian rupees. You give him some Indian rupees, he gives you Singapore dollars. Okay, so you are called a type. In this case, you are called a price taker. Okay, like in taking, you're taking the price. Okay, and the market maker is called the price maker. Is this clear? He's making the prices and you're taking that price. Okay, so now in this case, if you want to buy gold, do you think you'll buy at 96 or 98? Okay, so we have most of the people are on the 96 side, right? Anybody on the 98 side? You are saying 98? You are saying 98. Okay, why? Yes? Why? No, don't be ashamed. You should, like in the US universities, they always say, like, this relates to a question, that the only stupid question is the one that is not asked. Okay, so always be free to ask any kind of question and give any answer. It doesn't matter. Nobody's going to attack you for giving a wrong answer. You just say whatever's in your head. Why you gave an answer saying 98? What you're saying is that if I'm a price taker and I'm looking at the market makers' prices for gold, 96 and 98, and you're saying that if I want to buy gold as a price taker, I'll have to buy at 98. Okay, so why? Why not 96? No, first of all, don't speak in Hindi. We want to get everybody into the English mode because you are studying to be a business student, right? And what is the language of global business? English, right? So you should always get into that mode, speaking in English all the time. Yeah. Yes. Yes. Okay. So yes, anybody else with an answer?
So
you don't have to get up. You can just sit and answer. Relax.
So 98 because the valuation of the gold will be much more if the price taker valuation is more. If I buy it in 98, then the valuation of the gold will be more than 96.
So why should the valuation of gold? First of all, actually the term that you're using is not correct. We want to make a distinction which we will not have time to do today. But remember, there's a distinction between valuation and price. Right now we are looking at prices only. Valuation is something which we do, that's a subjective exercise. Okay, valuation is a subjective exercise. Whenever you use the word value, you should use it as a subjective sense, in a subjective sense. That according to me, the value of this building in Durgapur is maybe $20 million. Okay, but the actual market price of that building may be $15 million. But I think its actual value is $20 million. So understand this basic distinction between value and price. Okay, value is always a subjective assessment. Okay, where you think what is the real value of this. Okay, in that sense. Whereas so the valuation always has the subjective element in it. Okay, most of the time. Okay, except for arbitrage-free valuation. And price is always objective. Now this is objective data. Okay, 96, 98. These are the prices. Okay, yeah.
So bid and basically the bid.
This is the bid and this is the offer.
Okay.
Yeah.
So a person when is bidding, the price is going high. If I am bidding, the prices are going high. So on that price only we will buy now.
No, actually what you said is not really correct, that when you are bidding the price always has to increase. No. Okay, that's not really always correct, because that's not a correct statement, because you have made it in a very universal sense that when you are bidding the price always has to go high. That's not necessarily true.
And that is the offer, that the price that is.
Okay, let me explain why this is going to be the case. So most of you are saying 96. Okay, I think what you're probably saying 96, what you mean is that 96, so I'll do it a little bit. I won't have it fully interactive because then we'll lose more time. Okay, I want to try and transmit as much conceptual knowledge as possible. So in a little it'll be a little bit more of a lecture mode. Okay, you understand why we are under time pressure, because if I keep on asking everybody why do you say 96, we will lose time, right? So although it's more fun to do it that way, I'm not doing it that way because I want to save time. I don't have much time. These guys are standing khorgoniye dariye ache, so they're going to chop my head off. Okay, so now what we have to do is okay, so 96 and 98. So when I'm buying as a price taker, I will have to pay 98, because think about it from the market maker's perspective. Okay, the market maker, remember this, I said this is remember what is happening here. If I am buying at 98, if I am buying gold, then what is the market maker doing? Is he selling or buying? He's selling, right? So if I'm buying, then he's selling. If I'm selling, then he's buying, right? So remember that the person who is more dominant in this situation is actually the market maker, because he's the one who's making the prices. Okay, he's the price maker. You are just the price taker. Okay, you are like what we call a market user. You're using the market. He's making the market. All right. So now look at it from his point of view. If you are buying, that means he's selling. Okay, so if you buy at 96, okay, then he's selling at 96. He's selling at 96, and if you're buying at 96, that means you'll be selling at 98, right? The corresponding entry will be, if you're buying at 96, then you have to be selling at 98. If you're selling at 98, that means he's buying at 98. Look at it from his point of view. Now you put him in a situation, the poor guy is buying at 98 and selling at 96. Do you think that's a good business model? No. So he's going to lose money. Okay, so no market maker will have a business model like that. So think of a US used car dealer. Okay, so if you go to a used car dealer and sell him a old Honda Accord for, let's say, 5 lakhs, okay, then he goes to buy that same old, so that fellow will buy, the dealer will buy the Honda Accord, the used Honda Accord at 5 lakhs. Now when he goes to buy the same Honda Accord, you think he's going to sell it to him for 4.5 lakhs? No, he'll put a markup and sell it probably for 7 lakhs. Okay, so this is how any market maker will work. So because the used car dealer is kind of like making a market in used cars, right? He's quoting prices for buying and selling. Okay, so therefore any market maker will always want to buy at a lower price and sell at a higher price, the same product, the same asset. Are you following? You guys at the back are engaged, right? Okay, so this is why when you are acting as a price taker in the market, when you're acting as a price taker and you're dealing on the market maker's prices, this is the language that we use, you're dealing on the market maker's prices, you will have to buy at the higher price, which is the market maker's offer price, and you will have to sell at the lower price, which is the market maker's bid price. The bid means, as is basically what it's saying, is the market maker it's similar to the sense in which you use the word bid in a tendering context, is the market maker is giving you a price. Okay, I am willing to buy gold at 1496. Okay, so he's kind of bidding for gold, just like he was bidding for a tender. Okay, so he's bidding for gold at 1496, and I'm offering gold as a market maker. As a market maker, he's offering gold at 1498. Offering means I'm offering it to you. You can take it if you want. Okay, so that means I'm offering to sell. Is this clear? All right. Okay, so we've learned two things now. We've learned about market makers, and we've learned about bid and offer prices. So a market maker essentially makes a market in any asset. Okay, like your money changer makes a market in currencies. Okay, here the market maker is making a market in this gold, in this market for gold against US dollars. Okay, and a market maker will always post two-way prices, one for him to buy and one for him to sell. And obviously at his buying price you will be selling, and at his selling price you will be buying. So the net result is, when you're a price taker dealing on a market maker's prices, you are always getting the worst, the worst of the two prices. Okay?
The user is not making the profit, sir.
Who?
The user is
not making the profit, but this is the price that you have to pay for being a market user. Okay? So remember, the market maker is also taking some risk, because what might happen is he might actually have a day on which everybody is buying gold for him. Everybody's buying gold from him, because he's quoting prices for both. He's quoting both bid and offer prices. So he cannot force users, like suppose 10 users have come to him and bought gold, right? He can't now tell the 11th price taker, he can't tell him now you have to sell because other people have bought. That fellow will do the price taker will do what he wants to do. All right, so this is the problem of being in the market making business, and that's why you need to allow him to make this spread. This is called the bid offer spread. The term that we use for this difference is called, between the bid price and the offer price, this is called the bid offer spread. This is basically the compensation that has to be paid to the market maker for the risk that he's taking by making markets. Because, and see the risk, what might happen is on a given day, everybody's coming and buying gold from him. So what is happening is he's continuously selling gold. Okay, so he's becoming what we call, have you heard these terms, long and short? Right? So he's becoming short gold, which means now he's exposed. If the gold price goes down, is that good for him? If he's very short gold and the gold price goes down, is that good or bad? Why? If I have sold gold, 1 minute, think about it. If I have sold gold, if I sold gold at this level, if I sold gold at this level, for every ounce of gold I got 1785. We have how much time? We still have a little bit of time, no? 20 to 30, 15 minutes. We have okay. We'll try to wrap it up in 5 minutes. Okay. Okay. So why are we hurrying? The students, are you feeling restless? Are they? So why are we rushing? I'm just wondering. So I would like to continue for as long as the students are happy to continue.
No,
unless
don't have any issue.
the hotel's not going to throw us out.
No, of course
okay.
not.
Okay, good. So then we'll continue for as long as we continue till I drop dead. Okay, we'll just continue till okay. So all right, let's continue here. Let's see here, guys. So you just said that if the gold market maker is short gold and then the price drops, okay, then it's bad for him. Okay, so I'm saying why. So when I sold, let's say I've gone short. Okay, I've gone short when the price was 1793. You can look at the cursor where the cursor is right now. Okay, or you can look at this. The positioning is not correct. Okay, so let's look at 1793. I'm short at 1793, which means I've sold a lot of gold for 1793. So every ounce of gold I've sold, let's say I've sold 100 ounces of gold. I have sold 100 ounces of gold at 1793. For every ounce of gold I got how many dollars? $1793. Okay, good. Now I have to, since I am short 100 ounces of gold, I have to buy back 100 ounces of gold, because ideally my position should be square. I should not have, as a used car dealer, I should sell 10 Honda Accords and I should buy 10 Honda Accords. Then I have a clean profit, because car balance is 0. And now I bought 10 at 5 lakhs and I sold 10 at 7 lakhs. So I have got 20 lakhs profit and I have no car balance. Is this clear? You got the logic? Okay. So this is how it should be. My gold balance should be 0. And I should sell the gold at a high price and buy it back at a low price. Then I make a profit. Right? So if I sell here, if I've gone short and after that the gold price drops, let's say it drops to say 1434. So all the 100 ounces I sold at 1793, now I buy back at 1435, okay, 1424, whatever, 1424. Then am I making a nice profit? Yes. Okay, so I'm making a nice profit. So 1793 minus 1424 into 100 ounces. Is that clear? That's my profit. Okay. So that means one thing we have learned is that if I go short gold as a market maker, if I go short gold, everybody starts hitting my offer price. They are buying gold from me. So they are going long and I am going short. This is clear? Everybody understands this long and short. I am continuously selling gold, so I am going short. So now after that, if the price drops, it's good for me. Okay. But is there any guarantee that the price will drop? No guarantee. As you can see here, this thing is moving up and down. Okay. So suppose I went short gold at this point at 1325. After that, what has happened? Not looking good, right? After that, now the market has gone up. So now am I making money or losing money? Suppose I have sold, now I'm losing money, right? So therefore this, you understand the risk of the market maker's business. You are saying the user is suffering. Yes, the user is suffering because the user is always buying at a higher price and selling at a lower price. Okay, but the user is using the market. Okay, just like the potato seller is coming to the vegetable market in the morning with let's say 50 kilos of potatoes. Now he doesn't really know how many he can sell. Okay, so everyone who's carrying some inventory or taking some, making prices in this case, he's taking a risk because people might actually all be buying from him and he will go short and then the price might rise. In that case, he will lose money. Okay, so he needs to be, in order to engage in this business, he needs to be compensated for the risk of doing this business. Okay, and this is the compensation. The bid offer spread is the compensation for the market makers risk of doing business by posting prices. Is this clear? Are you guys following? Okay, so we'll just cover one more topic and then we'll stop. Okay.
1 o'clock I had to leave them. So I need 15 to 20 minutes.
Oh, you have to leave them at 1 o'clock. Okay. So I'll just give you one short. I'll just okay. I'll just give you one brief, one more point. I'll just briefly cover so that you learn something else. Okay. Now come back. Let's say to this example. Okay. What is this? What market is this? What are the two assets in this market? Australian dollar and US dollars. Okay. Good. So in this market, okay, another trick that you learn is that, let's use this to learn this. This 67 cents Okay, 60, let's call it 59. Let's look at the last two to make a distinction. 59 cents, 50, we'll just call it 59, okay? 59 and 70, okay? So now what is this? What does this mean? Let's take the middle part, okay? 65 roughly. Let's take, 65. 67, 65 cents. Now what does this mean? 67, 65 US cents for one Australian dollar, or 67, 65 Australian cents for one US dollar? Correct. So he is correct. Okay, it is US cents for one Australian dollar. And the trick is, the way you can find this very easily in the financial market, in the currency markets, because notice something, in the currency markets both the assets are indicated. Can you see that? It's very easy to see what are the assets involved because both are indicated. Okay. All right. Canada versus US, sterling versus US, all are both are indicated. Okay. So the one that is indicated first. Okay, so in this case he is correct. So this 67.65, okay, I'm just calling it in cents. Okay, 67.65 is actually the number of US cents required to buy one Australian dollar. Okay, why is it? This is really a matter of convention. Okay, it is not a conceptual matter. It's just like knowing that in India we drive on the left hand side of the road. If you go to the US, you will be driving on the right hand side of the road. So there's no conception. I mean, if you can drive in India, you can drive in the US, at least moving the car around. But this is just a matter of convention. Okay, so this is just a matter of convention that in the currency markets, Australian, US, when you're quoting Australia against US, the convention is to quote the Australian. Here we call the Australian dollar the base currency. Okay, because if you look at an Aussie dollar US dollar chart, what is happening is, we can just look at this. Okay, here you look at the Aussie dollar US dollar chart. Okay, you can see at one point of time it used to cost almost $1.11 US dollars to buy one Australian dollar, but now over time it is costing only around 67 US cents to buy one Australian dollar. Okay, so over time what has happened? Which currency has become weaker in this chart? Australian dollar has become weaker. So we say the Australian dollar has been depreciating because now you can buy it for much less. In terms of one unit of Australian dollar, one Australian dollar can be bought for much fewer US dollars. Okay, so here we say that whatever is displayed first, okay, in the currency markets, the first item that is displayed is what we call the base currency. Okay, and we are going to generalize this term because currency is a type of asset. Okay, we looked at all the asset classes, so currency is also a type of asset. It's not a good, but it's a type of asset. Okay, remember we said that all goods are assets, but all assets are not goods. Okay, so currency is an example of an asset which is not a good. Okay, but potato is an asset and a good. Okay, so currency is a species. Basically, it's a species of asset. Okay, so we take this term base currency. In the currency markets, we say the Australian dollar is the base currency. Whatever is put first in the notation, whatever is put first is the base currency, and the second one we call the terms currency. Why do we call it the terms currency? Terms as in TERMS. Okay, why do we call it the terms currency? Because one unit of Australian dollar is being priced in terms of US dollars. Okay, so here in terms of US dollars it used to cost 1.11. Now in terms of US dollars it's worth only 6.7. So that's why the US dollar is called this. The second one is called the terms currency. Okay, so it's always being priced in terms of the US dollar. So we generalize these terms, okay, these expressions to all assets, and we say, instead of saying base currency and terms currency, we say base asset and terms asset. Is that okay? We are generalizing, we are going from the particular to the general. Okay, we are taking currency terms and we are applying it to all markets in all asset classes. We are saying base asset and terms asset. Okay, so here we say Australian dollars is the base asset and this is the terms asset. Okay, is this clear to everybody? So you've learned two more terms, essentially base currency, terms currency, which we are generalizing as base asset and terms asset. So now if you go back, let's take another different market briefly. I'll just wrap up now, just to emphasize this point. Okay, here you see copper. This is basically quoted in terms of dollars and cents per pound. Okay, so this means right now it's around $2.58 roughly, let's say. Okay, US dollars per pound of copper. Okay, so the unit of the market also has to be, that's also a matter of convention. You have to know what the unit is. When you go to the market, you find out what the unit is. Okay, it could be kgs, it could be quintals. In this case, it's pound. Okay, so here you see, what is the base asset? Can you tell me? Yes, copper, correct? Because you can see straight away from the chart what is not changing. 1 pound of copper, it's not changing. This is always going to be the price of 1 pound of copper. What is changing? So that's why you have the concept of base. You know, the base is kind of fixed. A base is fixed, it's not changing. Okay, think of it that way, remember it that way. Base asset, that which is fixed and not changing. What is not changing in this chart? 1 pound of copper. That part is not changing. What is changing from 4.65 all the way down to 2 point something, 1.85 something, 1.93? What is changing? Number of US dollars required to buy 1 pound of copper. That is changing. So 1 pound of copper is being priced in terms of US dollars, and that's why the price keeps fluctuating. Okay, so that's why the US dollar is the terms asset and copper is the base asset. Is this clear? Is this terminology clear now? So we have learned a few things now. So I think I'll just stop now because I think my voice is also giving out. Okay, so we'll wrap it up. I'll just close the recording so that we have. Okay, so I'll just stop the recording.
Should I continue, sir?